Hi, as we approach the end of the year, I am here to tell you that it is not too late to reduce your tax bill. This is actually the perfect time to review your income, your expenses, and financial goals so you can not only reduce your tax bill, but also set yourself up for a successful new year. Today, we will look at tax strategies for not just business owners, but we will also be looking at tax strategies for individuals. We will look at some real world examples to make sure it is all clear. Before getting into the details, for those who are not familiar with me, I'm Shavis. I help home care agency and small business owners increase revenue by 25% or more with organized accounting and financial strategies. Okay, so let's get started with individual tax strategies. These apply whether you're a W-2 employee, self-employed, or both. So, one of the easiest and most effective ways to reduce taxes is through a retirement savings. For 2025, you can contribute up to 23,000 to your 401k. If you're 50 or older, you can add an extra 7,500 in catch-up contributions. Traditional IRA contributions are capped at 7,000 plus 1,000 catch-up if you're over 50. This helps lower your taxable income. So for example, if you earn 100,000 and put 20,000 into your 401k, you will only be taxed on 80,000 and not the full 100,000. This means that your taxable income will be reduced by $20,000. Next will be to fund your health savings account, your HSA. If you're on a high deductible health plan, you can use an HSA, which is like a triple tax benefit account. Contributions are tax deductible, growth is tax free, withdrawals for medical expenses are also tax free. So for 2025, you can contribute up to $4,150 for individuals and $8,300 for families. For example, let's say you contribute 6,000 to an HSA and use it for medical bills. That 6,000 is never taxed. You are saving hundreds of dollars automatically. And get this, you have until April the 15th, 2026, which is tax day, to make contributions that count towards your 2025 tax return. Next, let's consider making charitable donations. If you plan to give to charity, do it before December 31st. You can donate cash or even better, donate appreciated stock. If you bought stock for 1,000 that's now worth 3,000, donating it directly means you avoid paying capital gain tax and still deduct the full 3,000. You can also consider a donor advised fund, which allows you to claim the deduction now but distribute the funds to charities later. So this gives you time to research the charitable contributions you would like to donate to. So in this case, your charitable deductions will be reported on Schedule A and added to your itemized deductions. Next will be to review your withholding and estimated taxes. Check your paycheck withholding to make sure you've paid enough taxes throughout the year. This prevents surprises or penalties in April. The IRS has an official calculator that helps you estimate whether your current withholding will result in a balance due or a refund. If the estimator shows that you are not withholding enough, you can make additional tax payments by updating your Form W-4 with your employer or by going directly to irs.gov and making an estimated tax payment directly to the IRS. Energy efficient home credit. If you've installed solar panels, upgraded HVAC, or bought an electric vehicle, you may qualify for a 30% tax credit on those costs. That's not a deduction, that's a direct credit off your tax bill, meaning it reduces your tax bill dollar for dollar, not just your taxable income. Now, let's shift gears to my business owners, especially those of you running home care agencies, real estate businesses, or service based companies. The goal here is to legally lower taxable income before year end. So the first thing you can do is purchase equipment before year end. Under the Section 179, businesses can deduct the entire cost of qualifying assets in the year they're placed in service. So, for example, if your agency buys a $5,000 laptop or a $30,000 vehicle for business use in December, you may deduct the full amount this year and not spread it over time. If the purchase is needed, it could mean real-time tax savings before December 31st. Now, I do not suggest making large purchases just to lower your tax bill because it lowers your taxable income and it is not dollar for dollar. So, if you purchase an item just to lower your tax bill, you could be spending more than you are saving. Just make sure you strategize your return on investment. It is good to work with your tax professional in some cases. It is not beneficial to deduct the full amount. Next will be to review payroll and issue bonuses. S Corp owners, make sure you're paying yourself a reasonable salary. Then consider issuing year-end bonuses to employees or yourself. It reduces taxable business income. Clean up your financials. Before filing taxes, reconcile all bank and credit card accounts. Separate personal and business expenses. Update depreciation schedules. Cleaning up your financials ensures you don't miss deductions. One of the most straightforward ways to reduce taxes is to maximize ordinary and necessary business expenses. Three of the most commonly missed business deductions, especially for service-oriented small business like home care agency owners, are professional development and training. Your home office that is regularly and exclusively used for businesses. This is only beneficial if your company is operating at a profit. And another one is business knowledge. By doing these correctly, it lowers taxable profit, reduces your tax bill, and can be planned strategically around year end. Remember, tax planning isn't just about saving money today, it's about positioning yourself and your business for long term financial health. By taking action before December 31st, you can reduce your tax liability, improve cash flow, and enter the new year with confidence. If you'd like help reviewing your year-end financials or creating a customized tax strategy for your home care agency or small business, please feel free to reach out. I'd be happy to support you. Let's finish 2025 strong and make next year your most profitable year yet. Thank you. And as always, wishing you much success in your business.